welcome to another roller coaster ride as we get through COVID. Cathy, Sabater, mortgage planner and proud liver. There is a stock market and a real estate bubble. Yes, it's been happening. I don't usually talk about stock market and the real estate bubble together, but I am today. You know why? Because at the end of the day, it doesn't matter. We still don't know when it's going to slow down. So how much longer can we continue to see home prices increase, right? Well, we've noticed that there's an uptick in interest rates, right? Will there be an increase in home built? Cash buyers are paying above, which is driving prices higher. But at the end of the day, there is going to be a price point that people cannot afford it, and possibility that will hit a peak in 6 months as far as that's concerned, okay? So what are the direct, indirect, short-term, and long-term things that are happening? Well, we are directly affected by home prices, interest rates, income, and most importantly, inventory, right? So indirectly, right, because you've heard some of my videos, employment. Here's a big one, emotions, right? Because at the end of the day, do you want to get in the game? Are you ready to play? Or are you going to sit and wait, right? I think about, some of the things I could have invested 1 or 2 years ago. I'm like, oops, I missed that one. But it's okay because I am where I'm at right now. So that's part of the emotions, especially in this pandemic, right? Inflation. We all know that inflation is what? The root of the evil for, it's an arch enemy of mortgage bonds. And then you've got intervention, right? So what about short term? Well, right now, supply has decreased. Interest rates are fluctuating, but they're still low, right? Demand is increasing and prices are increasing. And hopefully long term, we'll see supply increase. Interest rates stay low, right? Because at the end of the day, they're still considering low. We just got a little spoiled, right? And then when demand decreases, perhaps prices will increase. But at the end of the day, it's just like the stock market. So I wanted to show you the graph of the stock market compared to mortgage bonds, right? Because I always tell you this is S&P, right? So it's up 745. So when you look at this, look at the trend of mortgage-backed securities, all the losses that we had, and as we continue to incrementally, right, get back where we were, okay? Then you look at the S&P, and you see how they have incrementally, if you look at how well they are increasing, at the end of the day, we still have a stock market and a real estate bubble. But when is it going to end? It's kind of hard to predict, especially in this pandemic with all of the new laws that they have to do. And we have Congress and the House sitting down, hopefully making some new laws to help us get to the next step, because capital gains was mentioned the other day by the administration. And are they really going to almost double capital gains? Because remember, when the economy is doing well, right, interest rates tend to go up. And in this case, so is the stock market. So when we consider it a bubble, it's just like any other trend, it is going to, I don't think it's going to pop, but it is going to trend downwards. It's going to be interesting to see when it does happen. Anyway, you stay safe, and I will talk to you soon.